Reliance Jio just hired 17 investment banks. Yes, 17 investment banks for its IPO. But here is the part nobody is explaining. Jio is not raising any money from its listing. Not even 1 rupee. So exactly what is this IPO for? If it is not raising money, what is this IPO for? Now let me decode this because the structure changes everything. This IPO is an offer for sale. That means Reliance Industries, the parent company, is selling its own shares in Jio to the public. The money goes directly to the Reliance and not to the Jio, which is a separate entity. So therefore, the Jio does not get fresh capital for expansion. It does not get funds to build new towers or launch new services. The business doesn't change at all on the day it lists. What changes is the ownership. Mukesh Ambani's Reliance cashes out on a portion of its stake and you, the public investor, buy in at whatever the valuation the market decides. Now, this isn't unusual. Many large IPOs, the question you need to ask isn't, is Jio a great business? Everyone knows it is a very good business. The question should be, at what price is Jio a great investment for me? Those are two different questions I am actually referring to you. Now, this will likely be one of the largest listings in the Indian history. This means that it will act like a liquidity vacuum. Mutual funds will need to free up the cash for allocation. The institutional investors will sell existing holdings to fund subscriptions. Retail investors will pull money out of their positions or redirect SIP top-ups. While the IPO window is open, your existing portfolio may see selling pressure, not because anything is wrong with your stocks or investments, but because the capital is migrating towards the new listing. And after it lists, the Jio enters the Nifty. Yes, that triggers the mechanical rebalancing across every index fund and ETF in the country. Now, the stocks that get displaced from the index, they actually face forced selling by the passive funds. Your portfolio could have a position that drops by 5 to 10% purely because the Jio has taken its seat in the index table. If you already hold Reliance Industries, you face very specific dilemma. Once Jio lists separately, the Jio value that was embedded inside the Reliance shares that you were holding gets extracted and priced independently. So because the Jio has come out, has the RIL share downgraded now because its value has gone down? Or does the market reward the parent for unlocking the value and that value has come on to Reliance in the form of cash, which it could obviously monetize and deploy further? So the history says both happen. Initial dip followed by the longer term re-rating, but that initial dip can be meaningful and timing it is nearly impossible. Now, India's biggest IPO is coming. Everyone will tell you to be excited. I am telling you to be informed first. Now, the excitement fills subscription, but the information actually builds the portfolio. Follow for IPO analysis that starts with the structure and not hype. This is Rajadar, your money sage.